Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, January 15th, 2022. Hope you're having a good day. I appreciate you tuning in today. Kind of a wild week that we had in the market last week, and we're going to go over this in today's podcast. So here is the plan for today. First of all, as always, I need to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at the trades that I had last week. We're going to talk about when I bought them, why I bought them, and how I am going to manage them moving forward. We're going to take a look at some daily swing trades that I have. We're going to take a look at some of the weekly trades that I have. We're going to take a look at some of the monthly trades that I have. And we're also going to take a look at a nice day trade that I have as well. You know, my philosophy in trading is to consist of three things. First, trade as many different time frames as possible. That is why I trade during the day trading. I trade weekly bars, I trade monthly bars, I trade daily bars. I like to trade as many different types of strategies as possible. That's number two. And number three, I like to trade as many different types of stocks, different industries, and getting outside of equities, gold, bonds, silver, dollar, as well. So it's many different time frames, as many different trading strategies, and different type of time frames. I am an end of day trader. I believe that the best way to trade for your swings, regardless of the time frame, is entering, exiting your positions based upon the closing bars, whether that's monthly, weekly, daily, or intraday. The majority of my trades are the daily swing trades, and I always take those at the end of the day. And I say this because during the day, the algorithms and the day traders, they are the ones that are in control of the price. At the end of the day, the large financial institutions come in, they take control away from the day traders and the algorithms. They're dealing with the most money. They have very smart people, best information, best technology, and I consider the closing prices of the day to be the most valid prices of the day, and therefore the most valid time to make your buying and selling decisions. So, like I said, we're going to run the U.S. legal disclaimer. We're going to look at my current trades across different time frames. We are then going to talk a little bit about trader psychology. It is the most important skill that you'll ever develop in trading, is the ability to create a plan and then follow your plan. It's a skill. Learning how to trade is important. Support, resistance, exit levels, entry levels. Yes, it's all very important, but the skill of being able to follow the plan that you created in the first place is the most important. And if you want to be a long-term profitable trader, that is what you need to do. You need to follow the plan that you put in place. There's an old saying, plan your trade and trade your plan. So I like to spend a few minutes on trader psychology, talk about that, the importance of it. Hopefully it will resonate with you and you can internalize and implement it in your trading. After that, my good friend Frank is a great poet. He always writes pertinent poems about the market. And he has a great one that I saw and that I want to follow with you and go over with as well. After that, we are going to go down through my watch list, and we're going to take a look at some potential trades for next week. It's very important to me that I look for confluences and combination of indicators lining up, not on just one time frame, but on multiple time frames. That's where I think you really will improve your trading, by looking for support on multiple time frames. Okay. In addition to finding the setup, I have 7 requirements when I look to enter a trade. First, I need to position size based upon the current the current volatility of the market. It's very important. I don't always buy the same amount of shares. When the volatility is higher, I buy fewer shares. When the volatility is lower, I buy fewer shares. I need to know what my maximum allowed dollar loss is on any one trade. I need to know where my emergency stop is. I need to know where my end of day stop is. I need to know where my intraday profit targets are. I need to know where significant overhead resistance levels are, and I need to have a good trailing stop methodology in place. so that if I have a profitable trade, I don't give it all back. So to be a profitable trader, there's a lot involved, and I'll go over this today in this podcast. So I will go down through my watch list, which is over here. We'll take a look. We'll see if there's something interesting setting up for next week, and if there is, I will point it out to you. I will also point out what I'm waiting for to enter a trade. And so hopefully this will give you a few things to look at for next week. It's been an extremely volatile week, and well, we'll get to that in a minute. So I'm going to run the U.S. legal disclaimer. I'll be back in about 40 seconds and we'll get started. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, thanks for holding on with me. As I mentioned, last week was a very difficult week. There was a lot of volatility in the markets. My daily swing trades last week, probably the worst week I had in a year. But we'll go over that. We'll take a look at the daily swing trades. We'll go over the weekly trades. We'll see how those are doing. We'll go over the monthly trades. We'll see how those are doing. But let's get started. Okay, first on deck, on January 2nd, I bought Nike. Nice signal here, combination of indicators. You can see I bought it on the 12th, excuse me, on the 12th. On the 11th, it closed below the 250, closed above the 250. It went under 30 RSI, went over 30 RSI. That's a confluence of signals. That's why I bought it. My end of day stop was a close below the 250. I always want to buy when the support is below me. So I bought here on the 12th with the close under the 250, over the 250, also combination of the under 30, over 30, bought here at 152.28. Next day, I got stopped out. It's never fun to get stopped out, but it's an important part of trading. You have to do it. So I did buy it here at 152.28, got out at 149.66 for a loss. And from entry to the exit, it was a 1.8% loss. You can see I have two lines here. I have my maximum allowed loss, which is down here at 144.20. I usually wait till the end of the day before I get out of my positions, but I have to have an emergency loss down here as well. So emergency stop loss as well. So if it does get down there, I get out and don't wait for the end of the day. I usually take 1% of my capital. So if I have $100,000, 1% of that is $1,000. I divide it by the value of the 2 ATR that shows me exactly how many shares to buy. It accounts for the volatility. And in any trade, you have to know if everything hits the fan, where am I going to get out? Where's my maximum allowed loss? And that's my emergency stop. You can see it did not hit my emergency stop, but on the day that I sold it, it closed below my end of day stop. So I always use two stops, an emergency stop and an end of day stop. The orange line above here, this is 1.5 ATRs above my entry. Had it moved my way, then once it got to that level, then I would go into trailing stop mode. So I would institute a trailing stop methodology so that I don't give it all back. But unfortunately, this was just 1 day in, 1 day out with the volatility we had last week. I immediately had to get out. It's 29.09 RSI right now. If it closed back above the 30, I may re-enter. So anyway, loss on this trade, and we'll just wait for a new setup. Next trade, other trade that I took on the 10th. Nice signal here, V1. Close above the 200-day moving average. It's a higher low V1, close above the 200-day moving average. I bought this on the 10th here at 125.87. moved up nicely the first couple days, and I always take partial profits of my position when it moves up, so that if it does move back down like this, it mitigates the loss. So I bought a full position here at 125.87, moved up. I took 10% off here. I took 10% off here at profitable levels, and then we had the big down day in the market, and I had to get out of the balance here at 116.70 because my end of day stop was a close below this black line, which is the 200-day moving average. So it was a loss. Entry to exit, 8.25% loss, but honestly, it's not really an 8.25% loss because I did take partial profits on the way up, and that's why I do that. It mitigates the risk if you have a move down. So anyway, not a great week for Unity, not a great week for the market. So that's why I got out. No new entry signals here. And then lastly, Zoom. I did buy Zoom here on the 6th, double bottom, bullish divergence, meaning that this move down here had deep red MACD bars. We rallied into some green. We came back. We tested the previous lows. There was no green here, or was no red here, no red MACD to the downside, indicating that the selling was slowing, and that's why I bought it. The trigger was a false breakout to the downside of this low, and a V1, and an under 30, over 30. Perfect trade. I would take this time and time and time again, but last week was so volatile, didn't matter. So here was my maximum allowed stop here at 157.80. This was my trailing stop level here. This trade never really got going, moved sideways. And then here on the 13th, I had to get out with a close below the 30 RSI. Did not hit my emergency stop, but it got very, very close. So 95% of the time trading this way, you are not going to hit your emergency stop. You're going to hit your end of day stop. And my end of day stop was a close below the 30. I got in because it went under 30, over 30. I got out here on the 13th because it closed under 30. So this particular trade, not so hot tamale, down 8.82%. So yeah, not a great start to the year for the daily swing trades. Probably the worst week I had in a couple years, but that happens. It is part of trading. Okay, so those are the daily trades. I am flat at this time on daily trades because I got out of the 3 positions that I showed you. Let's go over to some weekly trades here. I did buy Merck on the weekly bars. Weekly bars close on Friday. I did buy here with this nice intraday rejection of the 200-day moving average. I bought this one at 71.90. My end of day stop would be, or end of week stop in this case, would be a close below the 200-day. Way down here was my emergency stop because I always have an emergency stop. My end of day or end of week stop would have been a close below the 200. It held, and that was the level that really held. So I bought it here at 71.90. It has moved up beautifully ever since that. Of course, as it moves up, I always take partial profit. So on this bar, I think I took 20% off. On this bar, I took maybe 10% off. But all in all, entry to exit on this particular position, this position is up 11.63%, which is nice. Now, do have earnings coming up here on February 3rd. I never hold through earnings, regardless of whether it's a daily, weekly, monthly trade. I never hold through earnings. Holding through earnings is one of the best ways to lose a lot of money quickly. Yes, you can make a lot of money quickly as well, but our job as traders is to be risk managers. We have to think about the risk first, not the profit. If you concentrate and keep the risk in mind, that's when your profits come. But if you only focus on profits and forget about risk, that's when the losses come. That's just what it is in trading. So nice, what did I say on this one? Yeah, it's about 11.5% gain on this particular trade, so it's been a good one. Let's go. So that's my only weekly trade. Monthly trades, I did buy Exxon here with an intra-bar rejection at the end of the month. It rejected the 200-day moving average. That support held. Bought this here at 54.75. My end of month stop would have been a close below the 200-day moving average. It never did. It held. So didn't have to worry about the emergency stop, Haven't had to worry about the end of bar stop, which is closed below the 200. You can see the orange line up here is my trailing stop level. So a couple months ago, we got to trailing stop level. When I get there, if I get a close below the previous day's low, then I would get out of half my position. But this month went below during the month and then closed back above. This has been a great trade. Of course, as it moves up, I take profits as always. But this particular trade on the monthly, up 23.45%. So that's been a really great trade. We're at 65.87 RSI. As soon as I get to 65 RSI, then the close below the 5 EMA comes into place. So if we were to go up, reject the 70 RSI, I would get out of half. Then after getting out of half with the 70, if I had a close below the previous day's low, I would get out of the remaining amount. Or alternatively, if it closed below the 5 EMA, I will get out of the full profit. But again, this trade, really nice trade. I love trading monthly and weekly trades. This one up over 23%, which helps kind of mitigate the losses that I had on the daily. Now, I have a lot of people talk to me about day trading, and I do a lot of day trading. I really do. Again, I like to trade as many different time frames as possible, but this is a good example here for me to show you. I talked earlier in the podcast about looking at multiple time frames. Well, I usually trade the 5-minute, but I look at the 25-minute bar. I look at the higher time frame to give me a better picture of what's going on if we were at support. So what got my attention here? This green line, this is the 1 ATR channel. This is the -1 ATR channel. Anywhere in here is in the value zone. I like to buy in the value zone. I like to sell above value, or I like to buy below the value zone, sell in value, right? If you're in a business, you want to buy something for wholesale, sell it retail. It's the same with stocks. So I looked at the larger time frame during the day. This was yesterday on Friday the 14th. The bar on the 25-minute was right in the value zone. That's right where I like to see it. So that was a good place, larger time frame, to take a look at it. But then I switched to the 5-minute chart to express the trade. And again, when I was looking here on the 25-minute, we're in the value zone. This is a perfect entry signal for a day trade. We closed under the 200. We closed over the 200-day moving average. I would have placed my emergency stop 2 ATRs below, but my end-of-day stop would have been a close below the 200-day moving average. So if I'm wrong, I could be wrong very small. If I'm right, then I have the potential to make 2, 3, 4 times what I was risking to the upside. So again, I'm looking here at the 25-minute bar. When I took the trade, it was in the value zone. That's where I want to buy it. But then I went to the smaller time frame to express the trade, and I needed a signal to get into the trade. The trade was a close under 200, close over 200, bought here at 26.70. And look at this beautiful run that I had here. I scaled out portions of my position as it moved out on this particular bar right here. We had this big up and reversal to the downside. That's when I got out. But entry to exit in 5, 10, 15, 20, 25 minutes was 0.45%. So that's pretty good. So again, I like to trade the dailies. I like to trade the weeklies. I like to trade the monthlies, and I like to trade the intrabars. But it's important to always look for support and technicals on multiple time frames, and that's what I did here on this trade. We had a return to value on the 25-minute. That was good. I looked for the entry. The entry was the close under, close over the 200. Didn't know it was going to move up this nicely, but I knew that I had a good risk to reward, and I knew that I had the 200-day beneath me as support. Okay. Oh, lastly on the monthly, TLT. So I did buy TLT 1, 2, 3, 4 months ago. Higher low V1 was my entry, 147.96. Initially moved up, had a reversal back down. This is a monthly bar. So at the end of this month, then I have to make my decision. Again, down here, my emergency stop, my end of day stop will be if the 5 closes below the 20 EMA, that's where I will get out of the trade. So as it is here right now, if it were the end of the month, I would get out. But I position size so that my maximum allowed loss, the 1% of my total capital, doesn't matter if it's monthly, weekly, daily, if it got down here, then I would just have to get out. But 95% of the time, your end of bar stop will kick in, not your emergency stop. So this one was profitable at one point. Now it is negative. It is down about 4% on the trade. So that's what we got. So the only positions I have at the moment, I have the Merck position here on the weekly trade doing very nicely. On the monthly, I have the monthly trade. This one's up 23% or more. That one's doing really, really well. Earnings on February 2nd. So before February 2nd, I will exit this trade, lock in profits, hopefully. And then TLT, this one not doing so great, down 4%. But at the end of the month, because that's when the bar ends, is the end of the month, I will get out of this trade. And hopefully we'll rally back up. I don't know. So, all right. So earlier, I was talking about trader psychology, and it's such an important part of trading, everyone. Last week, with all the volatility and the market going down and the losses, what happens is that destabilizes a lot of traders. When things are going well, no one really works on everything. They think everything's going great. Their psychology is good. But when you have a big down week like we had last week, it's the equivalent of having a nice quiet body of water, somebody throwing a big boulder in, and all sorts of commotion going on with the water, and then it has to settle down. But emotions are amplified right now because of the losses. That's why we're having the volatility in the market. So there's not a better time to talk about trader psychology than after a week like last week. And by the way, if you had losses last week, don't get discouraged. All the traders, best traders in the world, have losses. They have to go through this time period. But the key is, if you had losses, do not try to chase them. Do not try to make the money back right away. Ideally, if you've had a big drawdown, trade smaller. Just try to wait, keep trading, but trade smaller. Just try to get some profits, build your confidence back up. But the worst thing you can do is double up, triple up, try to make it back. A lot of time it works, but every once in a while it is not going to work, and you could blow up your account. So with that being said, this is from Money Trade Edge, Better Thinking, Better Trading, one of my favorite posters on Twitter. Such great information on trader psychology. And let's see what he had to say. You can follow him, Money Trade Edge, Better Thinking, Better Trading on Twitter. Please do yourself a favor. It's free. Read what he has, internalize it, put it to use, because they're always great posts. Trading is odd. You grow through losses, not wins. Few traders realize this, and it is so true. And in my 25 years experience as being a trader, the time that I buckled down, spend a lot of time thinking, processing my trading. How can I do better? What have I been doing wrong? How can I improve? It all comes down to the times that I was in a loss, not a gain. When you're in a gain, things are going great. Don't have to worry about it. But when you go through a loss, it's a time for reflection and improvement. So he's right. Trading is odd, and you do grow through when you have losses, not wins. When you have wins, you don't spend time improving. When things are bad, that's when you spend time improving. So, ironically, one of the best ways that people improve their trading is when they go through losses. And last week was a good example of that. And few traders realize this. I realize it because I've been doing this a long time, and I always make the best improvements in my trading when I've gone through losses because things aren't working. I'm like, how can I improve? How can I improve? So I thought this was important. Again, if you had losses last week, take some comfort in the best traders in the world have losses as well. Please do not go there, get mad, revenge trade, try to make the money back. Ideally, trade smaller and just trade and try to print some profits on your books. And the more profits you get, even if they're smaller, will help your confidence. And if you did have losses last week, do some self-reflection. Think to yourself, why did I have the loss? How can I improve in the future? So thank you, Money Trade Edge. Better thinking, better trading. Please subscribe over on Twitter. Okay, so I mentioned earlier my friend Frank over on Twitter. Please follow him, Franco D. He's a journalist, songwriter. He's a wonderful poet, and he has such a knack to writing poems about the market. And let's see what Frank has to say today. Where there's a will, there's a way. The market is a business where there is no gray. Patience, focus, and determination are needed each and every day. Trading takes all you've got if it's gonna pay. Trading is tough, everyone. It takes a lot of focus. It takes the ability to deal with wins and losses and disappointments. It's life, really. That's why so many people can't make money in trading. They just don't have the right mindset. They don't have the attention. It's my life. And anyone that knows me knows that it's my life. I take it extremely serious, but I understand no matter how good of a trader, I'm going to have wins, I'm going to have losses. The important part is you just follow your process day in, day out, without exception. If you have an edge in your trading, in the long run, you will make the money, but you have to focus on the risk first and focus on following your process. So let's read it one more time. Where there's a will, there's a way. The market is a business where there is no gray. Patience, focus, and determination are needed each and every day. Trading takes all you've got if it's going to pay. Yeah, it's not a part-time gig. I can't even imagine being a part-time gig. You have to study, you have to focus, you have to reflect, you have to follow your process. So do yourself a favor, follow Frank at FrancoD over on Twitter. It's a great channel. Great poems almost every day about trading. Okay, so we went over my current day swing positions. Out of all of those, took losses on all of those. The Merck trade, doing great on the weekly. Exxon trade, doing great on the monthly. TLT trade, down a little bit on the monthly as well. So let's go ahead and go down through my watch list. All right. Like I said, I'm looking for a combination of confluences or indicators lining up on multiple time frames. That's the key. And I'm looking for good risk to reward ratios. That's the important part. Looking for strong support below me. So if I'm wrong, I can be wrong small. If I'm right, I can have nice upside, asymmetric risk to reward structures in my trade. So I'm just going to go down through each one here. Doesn't mean we're going to have a trade on each one, but something to look forward to for next week for some valid signals. Apple. All right. Well, Apple, here's the small blue line is the 5 EMA. The blue, thicker blue line is the 20 EMA. If we have a 5 crossing over the 20, that is a good back-tested, quantified approach to using a crossover system on Apple. Right now, the 5 is below the 20, but I like this sideways motion here in the value zone. I love to take crossovers after sideways motion because sideways motion leads to trends. We just don't know if the trend's going to be up or going to be down or when it's going to happen. But I promise you, the sideways motion is going to lead to a trend one way or another. And if the trend's down, you're out quickly, because you have your emergency stop, you have your end of day stop. If it's to the upside, well, you can take advantage of that because you really have unlimited amounts to the upside. I mean, up to certain resistance points. So anyway, the long and short of this on Apple is we are back into the value zone. I like to buy in the value zone. I like to sell above the value zone. I mean, if we go back in time here, you can see buying in the value zone, selling above the value zone was the correct thing to do. We are back in the value zone. I'd love to buy this. So if we have a 520 cross on Apple, that will be my entry. So I will select Apple as a potential for next week if the 5 closes over the 20. Adobe. Well, nothing really going on here with Adobe. We did have an under 30 over 30. Did have some profit there for a bit. I would like to see on Adobe an under 30 over 30 would be probably the most likely new trade for me. I'm not going to mark this. It's not really close to doing any of those. AGQ does back test well with the 520 crossover. We had this a few days ago. For me to get interested in AGQ, one of two things is going to happen. You can see we closed above the value zone. I'd like to come back into the value zone like we have. I'd like to see it move sideways, look for a V1 or V2 trigger. That would be one potential to get into this trade to the long side. Or if we continue down, have the 5 cross under the 20 and then back over for Apple. So nothing really here. You're going to hear me talk today a lot about V1s and V2 entries. I'm not going to explain them here, but if you go to my YouTube channel under the lessons video, look for the V1 or V2 entry link. That will show you exactly what I'm talking about with V1s and V2. So either a return to value, sideways motion, V1 or V2 entry would be one option. Another option would be the 5 crossing back under the 20 and then crossing back over for a new 520 crossover. So I'm not going to mark this one either. Amazon, well, excuse me. Few options here on Amazon. We could go down under the 30 and back over. That would be one valid entry signal. Here's the 250-day. The purple line, the black line here is the 200-day. So 3 options here. If we head down under 30, over 30, that would be one option. Second would be a close over the 250, using the 250 as your end of day stop. Third option would be a close over the 200-day moving average. So a lot of time with stocks, I either need them to go lower and test levels below, or I need to go higher and test some levels above before I get in. So right now we're kind of in this purgatory mode. So I don't really see anything even close for next week on Amazon. ARK. Well, ARK's been getting a lot of attention. This was a valid signal on Friday, which was yesterday, the 14th. We went under 30 RSI, over 30 RSI. If you look over here, you can see the RSI is 30.26. And then if I take my little tool here, I go to the bottom of the bar, on Friday, it was at 27.56. So intraday, but it closed at 30.26. So intraday, it went under 30, over 30, and it also rejected the negative third ATR channel. 92% of prices bounce here at this level. That was a legitimate entry on Friday. Under 30, over 30, rejection of the negative third ATR channel. For me to get interested in this trade right here, right now, it might just continue up because that was a valid signal. But what I'd really look for is another under 30, over 30. Since I missed this trade on Friday. So I'll mark ARK there. Boeing did have a close over the 200-day moving average. That's a legitimate signal for Boeing. However, this is too far up in the channel for me to buy. Remember, I like to buy under value or in value. This, yes, had a close under 200 and over 200, but we're at the third ATR channel. It's still a good risk to reward ratio, and it may go higher, but 92% of prices at this point, at this third ATR channel, are either going to go sideways or down. That's a fact. 92% of prices when they get to the third ATR channel go down. 92% of prices when they get to the negative third ATR channel go up. So statistically speaking, we are at a pretty high level here where there's not a very large chance that Boeing is going to go up from here, but you still could take the trade because it closed under the 200, over 200. Your end of day stop would be a close below the 200-day moving average. Your emergency stop would be $13.13 below. So this is technically a valid signal, but I don't like the context. I don't like the level where we are here at the third ATR channel. Again, for me to get interested in Boeing, I need this to come all the way back down to the value zone, look for a sideways motion, and then a V1 or a V2. So nothing there. Alibaba, same thing here. You're going to hear me talk a lot about this tonight, but look, green line, in the middle is the value zone. Anything above is considered overvalue. I want this to, for next week, I'd like this to come back into the value zone, look for some sideways motion, look for a V1, V2. So nothing really close here for me on Alibaba to match. Okay, this is BITO. This is an ETF for Bitcoin. I covered this last week. We had an under 30, over 30. That would have been a legitimate signal. You can see it would have been valid at this point. It's at a 36.27 RSI. Would not want to chase this here. What I'd really like to see on BITO would be for it to come down under 30, over 30. That would be my entry signal for BITO. So I don't see anything here. Not going to mark that. Berkshire Hathaway. I always see this trade, and my good friend Ava had a beautiful trade. Look at this all the way back here. She bought this with rejection of the 200-day moving average. If she was wrong, she was going to be wrong very, very small because it stayed above the 200-day moving average. This is a perfect example, and congratulations, Ava, on this beautiful trade. She was risking this very small amount. If it had closed below the 200, she would have just gotten out. Look at this beautiful trade she had. Very, very proud of you, Ava. What a great trade, but nothing interesting for me on Berkshire. I'd have to have this come all the way back into the value zone. Here is Bitcoin itself. This is the Bitcoin chart. Under 30, over 30 was the signal on Bitcoin. Would have bought here at about 42.56. It's 43.330 at the close on Friday. Nothing really here for me for Bitcoin. It would either have to go up and close above the 200-day moving average, so I have that as a support below me, or over the 250, or again, if we went under 30, over 30. So nothing really here on Bitcoin this week. Anheuser-Busch, just this huge move up. You know, I was talking about sideways motion leading to trends. Well, look at this. This is a perfect example here on Budweiser. Sideways, 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 sideways led to a trend. The trend didn't have to be up. It could have been down as well. But this is why I love to buy after their sideways motion. Doesn't mean it's going to go my way, but if it doesn't go my way, I can get out quickly. If it goes my way, I can have a move like this, and this has been a beauty. But nothing interest right now, way too extended. Beyond Meat. Looks like the 5 EMA is above the 20 EMA. If it crossed under and then back over, that could be a new entry signal for me on Beyond Meat. Don't really see anything here at the moment that interests me, so we'll just move on. Caterpillar doing well in this really tough market, very high here. Earnings are coming up. This is way too extended. We're at a 73.61 RSI, very difficult to get that high. Here's another example, everyone. Sideways motion leading to a trend. But for me to get interested in Caterpillar, have to have this come back down, test the 200 to give me a good risk to reward ratio. So not going to mark this one here. Cameco, really great trade here. I did not take this trade, but just as a teaching example, see the intraday rejection of the 200-day moving average, good risk to reward ratio, but look, this has moved up beautifully. Nothing right here, right now. Next stop for Cameco for me would be a retest of this 200-day moving average. That would be one option, or we were above the value zone. We've come back into the value zone. Now I need to see some sideways motion here and look for a V1, V2. So return to value V1, V2 would be one option. A deep dip buy down here, the 200-day moving average would be another option. And again, look at my videos in my playlist on YouTube. I go through all the different trade approaches that I use, and then I have that really good video about V1s, V2s. So not going to mark this one right now. Not close. Carnival, not close here. I would need this to have a return to value here. Look for a V1, V2, nothing there. DoorDash, we're at a 36.55 RSI. We had a beautiful double bottom with the bullish divergence here. Here we had this leg down with deep red. We rallied into green. We came back down. We tested the low. Hardly any red whatsoever. We did bounce after that double bottom with the bullish divergence. Right now, however, really not close to any kind of entry here. It could return to the value zone. I could look for a higher low V1, V2. Don't know if that's going to happen. the most clear trade for me on DoorDash, the most black and white trade on DoorDash would be if we go lower, go under 30, over 30. That would be a good one. So I'm not going to mark that one as well. Here's the Dow Jones Industrial. Good example of not buying above the value zone. Better to buy in the value zone and sell above the value zone. That's just basically it. A lot of people up here were buying, and they got hurt. We are in the value zone. I could look for a sideways motion, V1, V2. That's what I would be interested in, but I don't see that happening, or at least I can't foresee that happening. So I'm not going to mark that one either. Walt Disney, my gosh, really got beat up on Friday, down 2.55%. 520 crossover on Disney would be a potential. The 5 is still above the 20, but if crossed under and then crossed back over, that would be a potential. So I could see that happening next week. So I will mark that. DocuSign, look at this. We're at 29.87. If this were to close above the 30 RSI, that would be a legitimate entry for DocuSign. So I will mark DocuSign. Etsy, 23. Boy, Etsy has gone down. My gosh, 23.51. Potential entry on Etsy would be a close back over the 30 RSI, close back over the negative third ATR channel would be good as well. So on Etsy here, I'm not going to mark this. This is really, I mean, it has to get to the 30. The 30 would be kind of up in this area. Then the risk to reward ratio wouldn't be good. So I don't really see anything on Etsy. Facebook, well, this would have been a legitimate entry on Friday. It intraday rejected the 250-day moving average. I saw this, but I didn't buy this because we're not close enough to the 250 for me to get in. So if we came back down, retested the 250, that gave me a better risk to reward ratio, that would be one option. If it closed back above the 200-day moving average, that would be a second option. If the 5 crossed over the 20 EMA, that would be a third option. So I do see potentially one or multiple of those 3 happening next week. So I will take a look at Facebook. FCX, too far extended, would have to wait for a return to value, V1, V2. So not gonna pick that one. Fiverr, we're at 2701 RSI. We rejected the negative third ATR channel. We have a double bottom with the bullish divergence, meaning we have a low here with deep red MACD bars. We rallied to green. Now we're lower. Red down here is not as deep as over here, showing that there's a lack of selling momentum happening. The implication of that would be to go up. It did reject the negative third ATR channel. That's not enough for me to buy, but I like that it rejected the negative third ATR channel, and if it closes back over the 30, that would be a potential. So I will mark this. Gold had a 520 crossover here. That's a legitimate signal. I didn't buy it because it was too far extended. What I'd like to see on gold is if we pulled back into the value zone, retested the 200-day moving average with a good risk to reward. That makes sense to me. So I will mark gold. GNRC, double bottom, bullish divergence, needs a trigger back over the 30 RSI. That could happen for next week, so I will mark that one. Google, boy, Google really got beat up. We had a rally. We came back down here. For me to get interested in Google, I would love to buy it back here at the 200-day moving average. I don't think that's, I don't know if it's going to happen. It's not that close, so I think I'll just leave that alone. We have earnings coming up at the end of this month. That is also going to move the market. Goldman Sachs, this I would have bought this on Friday. This is a beautiful intraday rejection of the 200-day moving average. I would place my emergency stop $20.03 below. My end of day stop would be a close below the 200-day moving average. I love this trade. Obviously it was much, much higher. Came back, rejected the 200-day moving average, but the reason I don't buy it is because earnings are on the 18th, and I do not want to hold through earnings. Otherwise, I would have bought this on Friday for sure, but again, I don't hold through earnings. But I will mark it. because after earnings come out, if it goes down here at the 250-day moving average would be a really good spot to buy, or if it's holding above the 200-day moving average with a good risk to reward ratio, that would also be an interesting place right there. Home Depot. Well. I am definitely going to mark Home Depot. One of the best confluences of signals that I have seen in my trading career is a rejection of the 100-day moving average at the same time you have a rejection of the 30 RSI. Both of those happening together is a really great confluence. We're at 3165, so very likely we could go under 30 and back over 30 and at the same time reject the 100-day moving average. So that is definitely on my list. Probably one of the most favorite ones I saw here. Here's IBB. IBB did have a legitimate entry signal on Friday. It had a V1. It had under 30, over 30, and it had a rejection of the negative third ATR channel. My friend Ava did take that trade. I did not take this on Friday, but good luck to Ava on this trade. But yes, this was a legitimate trade. Under 30, over 30, under the negative third, over the negative third, and a V1, and a false breakout to the downside here. So wish Ava best of luck on that trade. I will mark it here just in case we do go under 30 and back over 30 again. Maybe take another look at taking it there. INDA, boy, talk about moving down and then moving straight back up. Not interested in this. In order for me to get interested in INDA, I'd need a pull back to the 200-day moving average, and that doesn't look likely. Intel. Another example here of a sideways motion leading to a trend, but this is too far extended. We have earnings, so nothing interesting for me on Intel. Russell 2000. Well, we were above the value zone. We came into the value zone. We have had some sideways motion. We did have a false breakout to an undercut of the previous low and a V1, but not really anything that I see here to buy on IWM. J&J. Well, what I'd like to see on J&J is I'd like to see a pullback to the 200-day, a deep dip buy to the 200-day moving average. So I will mark that one. That certainly potentially could get there by next week. JO, don't really see anything here other than a return to value. Don't know if that's going to happen, so I won't mark that. Carmax, this is interesting. We rejected the negative third ATR channel. We are under the 30 RSI, so we'll close under the 30 RSI. This certainly, if we had a decent day up next week, we could close back over the 30. That would give a confluence of signals of a rejection of the negative third ATR channel and a close back over 30, so I will mark Carmax. Coca-Cola has been very, very strong. I don't see anything here. It's too high for me to buy. Look for a return to value, sideways motion, V1 or V2. I'm not going to mark that. Lockheed Martin has been doing very, very well here, but it's too extended. Return to the 200-day moving average might be interesting. Not going to mark that either. Southwest Airlines. We've headed up since the low. I mean, it's been a straight shot up. I would like to look for a return to value, sideways motion, V1, V2. That's what I would look for, so I will mark that. Lyft, we were above the value zone. We came into the value zone. If Lyft could move sideways for a couple days in a V1, V2, I would be interested in that, so we'll put that one on the list. Mastercard rejected the 200-day moving average nicely. That was a legitimate trade. I didn't take that trade, but it has moved up nicely. Mastercard looking for a return back to the 200-day moving average. I'm not going to mark that. McDonald's, we are under the 200-day. I'm sorry. On McDonald's, we are under the 50 SMA. Boy, we have had a real fall from grace here, haven't we? Sorry, I think someone's coming in my front door there. Don't really see anything here on McDonald's. If we went lower down to the 100-day moving average or the 200-day moving average, that is what I would be interested in. So, but that's not very likely at the moment. Merck, I already have a position in Merck on the weekly, so nothing really here. Microsoft, interesting. 3785 RSI. What I'd really love to see on Microsoft is a test of the 200-day moving average here. I would really love to buy a company like Microsoft at the 200-day moving average. Don't know if it's going to get there, but if it does, boy, would I be looking to buy that. Netflix. Had this marked because I took a trade on this on Friday. We're at 2351 RSI. Earnings are coming up here, so I probably would not get involved in Netflix before earnings, but a close over the 30 RSI would be legitimate as long as you don't hold through earnings, and a close back over the 200, so I won't mark that one either. Nike. That's the trade that I took earlier. It's 2909 RSI. If it closed back above the 30 RSI, I would look for that as well and take another trade on it. So I will take that if that happens. Pfizer, don't really see here anything on Pfizer. Perkin-Elmer, PKI, would need a test of the 200-day moving average. So if we tested the 200-day moving average and gave me a good risk reward, I would be interested in that. PLTR, we're at 29.77. If we closed above the 30 RSI, that would be a legitimate entry, so I'll mark that. Philip Morris, man, look at this. I hate to say it, but it's been smoking, right? Look at this huge move up. Boy, buyers are really wanting to get into Philip Morris. I would need this to come all the way back to the 200 for me to get interested, so I won't mark that. PayPal, 38.87. PayPal's been kind of a wild one here. I would need an under 30, over 30. Don't see that happening right now, so I won't mark that. The Qs, which is the NASDAQ 100, an under 30, over 30 on something like the Qs would be a great entry point, or a 520 crossover. It's kind of stuck in purgatory right here. I don't see anything that would really, this would either have to move significantly down or significantly up for me to get involved. Interestingly enough, on the Qs here, we have the 100-day moving average right at the halfway of this bar here. For you, those of you that are shorters, that might be an interesting place to short, but I don't see anything for the long side. You didn't do it? Oh, okay. Sorry, my girlfriend just walked in. I was just asking her a question. Rio Tinto, boy, one of my students suggested this to me. Back down here, he's a contractor and he knows this company very well. He was right, $60.17. Now it's $17.50. That's rich. Good call on that, Rich. But here at this moment, I don't see anything that I would buy. Shopify has really been, Shopify did have an under 30, over 30 false breakout to the downside. This one is interesting here. I will mark that, but I would need another retest of the 30 RSI for me to get interested. SIVB, we're above the value zone, into the value zone, would need a couple days sideways motion, look for a V1 or V2. Earnings are coming up. That's probably going to mess that whole chart pattern up, so I will not mark that. SLV, I would look for a 520 cross under and then a cross back over as my entry point. So that would be a potential. I will mark that. We're getting there. We're getting there, folks. Snap, under 30, over 30 would be the entry point. We're at 28.88. So we are very close. We did reject the negative third ATR channel. So I will mark that. SPCE, Virgin Galactic, boy, it moved sideways for a while and really gone down. Under 30, over 30 would be a legitimate entry signal on that, but I think I'm going to stay away from this stock. S&P 500, we had a V1 here. Nothing really here. I'm not going to mark that one. TDOC, Teladoc, and under 30, over 30 would be legitimate next week, so I will mark that one. Teradyne, don't really see anything here. Bonds, an under 30, over 30 would be the legitimate entry signal. Don't see anything, don't see that happening. Tesla, really don't see anything here on Tesla either. Twitter, I do like Twitter. It's an undercut of the low here. It's a 29.03, so if we had a close back above the 30 RSI, that would be a good trade next week. And I will review the ones that I've checked before. Unity is the stock that I had to get out of. It did go, it looks like it went under 30, over 30 on Friday. That would be legitimate. So, but I'm not going to mark that. UAL, return to value is what I would be looking for, but it has earnings, so I'm going to stay away from that. Natural gas, this would have been a legitimate entry on natural gas on Friday with an intraday rejection of the 200-day moving average. Did not take that. Natural gas is a bit of a tough one to trade, although I had one of my biggest trades ever on natural gas, so I'll just move on from there. UNH, we have some sideways motion. They have a lot of earnings. It's going to change charts around a lot, so I'm going to bypass that. Look at oil. I mean, oil has just gone up like crazy, and look at the entry point here with the rejection of the 200-day moving average. That would have been an amazing trade. That's way too extended for me to get interested in. The dollar has been heading lower, which is good for stocks, but I don't see anything here. VIX, well, with all the volatility that we have, VIX has moved off the lows here. Did reverse back on Friday, which is positive for the market. Don't really see anything here on VIX on the daily. Verizon would need a return to value, sideways motion. Don't know if that's going to happen, so I'm not going to mark it. WBA, return to value, not going to mark that one. Walmart, nothing really here. Retested the 200. It's a long ways away from that. We're almost done, folks. XLE, boy, energy. Look at energy. Look at this trade here with the intraday rejection of the 200, and that thing never looked back, but is far too extended for me. I need to return to value here. XLF has had a nice run, need a return to value, but it's not close enough, so I won't mark it. Real estate, boy, look at real estate. Flying high, and it has just come down so hard here. Huge move down. Don't think I'm interested in anything in real estate at the moment. XLU, don't see anything there either. XLV, nice rejection of the 200-day moving average in the negative third ATR channel, but I don't see a setup there. Exxon, I have. That has moved up very, very nicely, but way too far extended on the daily. And then lastly, Zoom. This is one of the trades that I had to get out of, but it is a 2801 looking for a return to a return back over the 30 RSI. So real quick, let me pull up the flagged symbols and I'll just do a real quick recap. Apple, if we have a 520 crossover, that's a completely legitimate trade next week. That would be very interesting to me. ARK, ARKK, and under 30, if it went under 30 and back over 30, so if it's hanging out at that same level, that would be a legitimate entry for me. I just missed that on Friday. I'd like to see it go under 30 and back over 30 to give me a double test, but that's what I'm looking for on ARK. So Apple, looking for a 520 crossover, that's what I'd be looking for. ARK, I'd be looking for another under 30, over 30 to give me a good risk to reward ratio to enter there. Walt Disney just got hammered here. What I would be looking for next week on Walt Disney, if it continues lower and the 5 crosses under the 20, then crosses back over, that would be my entry point on Walt Disney. DocuSign, if it closes over the 30 RSI, that would be a legitimate entry. It's 29.87. Facebook, if we came back down, retested the 250, that would be one option. If we had a 520 crossover next week, that would be a second option. Or if we closed above the 200, that would be a third option. Fiverr, it's at 2701, rejection of the negative third ATR channel, so we'll close over the 30 RSI would be what I'd be looking for next week on Fiverr. GLD Gold, if we came back down, had an intraday rejection of the 200, that's what I would be looking for. GNRC, close over 30 RSI is what I would be looking for. Goldman Sachs, after earnings, if there's a good intraday rejection of the 200 or if it goes lower, rejects the 250, that's what I would be looking for. Home Depot, I'm really looking at Home Depot here. I like this trade. All we need to do is go under 30, back over 30, under the 100, back over the 100. That's a great confluence of signals for potentially next week. IBB, This one triggered on Friday. This one is legitimate, but if you're watching IBB, another under 30, over 30 would be legit. J&J, if we came back down further, tested the 200, I'd be interested in there. Carmax, close back over the 30 RSI, would be interesting to me next week. Southwest Airlines, return to value, sideways motion, V1, V2. Lyft, 520 crossover to the upside is what I would be looking for there. Microsoft, would love to see a intraday rejection of the 200-day moving average. We've been close to a 30 RSI. You know, Microsoft, one of the best companies in the world. And when that lines up with great technicals, that would be great. But keep in mind, earnings are coming up. Nike, close back over the 250-day moving average and close back over the 30 RSI is what I'd be looking for on Nike. PKI, move back down to the 200-day moving average would be a great risk to reward ratio on PKI. PLTR, close over the 30 RSI would be my entry on that next week. Shopify, went under 30, over 30. If it came back under 30 and back over 30 again, that would be a new place to enter shop. SLV, looking for a 520 cross under, cross back over, or a return to value sideways motion. Snapchat, close over the 30 RSI. Teladoc, a close under, close back over the 30 would be the entry signal there. Twitter, I really like. If we had to close over the 30, I would be looking at Twitter as well. And Zoom, 2801, if it closed over 30, that's what I would be looking for. So those are what I am looking at next week. Those look like the best setups going into next week. You know, I talked a lot about, you know, V1s, V2s, intraday rejections, the 200-day moving averages, bullish divergences. And, you know, if you're new to trading, this may be confusing, but I did want to let everybody know that I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm a good teacher. I teach a really good course. The course is 15 hours long, 5 sessions. Each session is 3 hours. And I teach you step by step all 5 of the different approaches that I use and have been using for the last 25 years. I've turned out some really great traders all across the world. The course does cost $1,750, so it is an investment, but it's a good investment and it's worth every penny. And you know, so if you're watching this video, you're not sure about these V1s, V2s, all the different things I'm talking about, you know, there's a couple ways that you can learn about that. One, I have a free playlist in YouTube where I go over the different approaches that I use, not in detail, not like in the one-on-one courses, but that is one option and that's free. Second option is the one-on-one courses. And if you are interested in that, by the way, all you have to do is send me an email. The email is in the link of the description of this YouTube video. Just reach out to me, say, hey, Greg, I'm potentially interested in taking your course. I will reply and say, hey, great, thanks for saying hi. Let's set up a Skype call. The Skype call is free. It's not a sales call. I promise you. I just would like to learn more about you and your trading, your challenges, your trading goals. And then it's a good time for you to ask me any specific questions about the the trading course in that Skype call. And when we're done with the Skype call, think about it as long as you want. One day, if you decide, hey, today's the day, and I really do want to learn this trading stuff, and I want to learn it the right way, just email me back. We'll get it all set up, and away we'll go. Third option is I do have an online course available at udemy.com where I teach you the deep dip buy stock trading strategy. It's a great course. I've had so many good reviews from all around the world. It's very affordable. It only costs $12 or $15 on Udemy, but it has 9.5 hours of video. It has 26 videos total. It has 15 study guides. It's a great way to start learning about trading at a very affordable price. And the link to that, to the Udemy course is in the description below. So I hope this was helpful. Hope this gave you some things to think about for some potential setups. They're right here in case you need to go back here, Apple all the way through Zoom, and you can rewind and take a look and see, you know, what I was looking for. But if you have any questions, feel free to email me. My email is gregory@gossettrading.com. You know, I'll try to reply as soon as possible, try to help as many people as I can. But I hope you have a good trading week this coming week. And yeah, if you have any questions, just please let me know. And as always, please be careful with your trading. Please position size correctly. Don't try to revenge trade. The market does have a lot of volatility at this moment. And so I appreciate you being here today. We have a holiday on Monday. So hopefully this will give you a little bit to look at before the market opens on Tuesday. And I will continue to do these YouTube videos on the weekends as far as reviewing the trades that I took during the week, and then also potential trades for what's coming up. And we'll do some more trading psychology. We'll do some more poems. But yeah, if you have any questions, anything you'd like me to discuss on the podcast, feel free to send me an email or just leave a comment in the YouTube video below. So have a good weekend. Be good, be safe, drive safe. Always be careful. Always look at risk before you look at profit. It's the most important thing in trading. And so enjoy your weekend. And I will create a new video next week. And I think that's about it. So on the way out here, I have to run the US legal disclaimer. So thanks again. Talk to y'all later. Have a good trading week next week. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of